The global financial crisis has become a global currency crisis, and there's no better example of that than what's going on in Brazil. The worry not so long ago was that the Brazilian national currency, the real, was getting too expensive against the dollar. People in Brazil were worried that this was going to hurt national exports because they would get too expensive. And so you had a lot of companies put in hedges, try to find some kind of financial instrument to protect them against continued appreciation of the real against the dollar. Well, the real is now sinking like a stone. The real, which was 1.56 to the dollar, worth about 64 cents in May, is now about 2.3 to the dollar, worth about 44 cents. The decline is about 33% in roughly, 5 months. That's a huge shift, but the real problem is all those hedges that banks and industrial companies in Brazil put on when they were worried that the real was going to continue to appreciate against the dollar. They put on hedges that would have paid them if the real had continued to get stronger. Instead, what they're looking at is hedges which have created huge losses because the real has sunk against the dollar. The real is sunk against the dollar not so much because of anything that's happened in Brazil, but as part of the unwinding of the global yen carry trade. And that really means that you're looking at big losses in Brazil and other countries where the currency was appreciating last spring and is now going down. How big a loss? Well, let's look at Aracruz, a big Brazilian paper and pulp maker. They're in fact the world's largest maker of paper and wood pulp. Now, Aracruz exports most of this outside the Brazilian market. So last spring, they were putting on hedges to protect them against the appreciating real and the sinking dollar. Well, now that the real is sinking and the dollar is appreciating, getting stronger, their exposure, according to Moody's, is about $6.2 billion. It's not clear they're going to take a loss on all of this. The dollar and the real could start to go in opposite directions again, and some of these hedges could turn out to be not as big a loss as they look right now. But $6.2 billion of exposure on a bet that's just basically gone wrong because they were looking for the real to continue to appreciate on fundamentals, and instead what they've got is the dollar getting stronger on the unwinding of risk in the world. That's the kind of loss you're looking at in almost all emerging markets. And not just emerging markets, you're seeing the same thing in Japan. Other companies and banks in places like China that actually speculated on a continued rise in something like the Australian currency have now taken huge losses. So we're seeing this happen all around the world in virtually every emerging market. We're seeing currencies really out of balance. We're seeing big losses being produced at unusual places. And this is just one more thing that has made investors nervous. Because if you can't tell who's about to lose money or how much, your basic impulse, and it's the right one, is to stay out until you can figure it out. This is Jim Jubak for Jubak's Journal on MSN Money.